Oil prices are back up in Asian trade after recording double-digit declines overnight. We've got Brent moving about $88.34 a barrel, WT about 87.60 there. At the start of this week, crude prices, they spiked above the $100 a barrel level for the first time in roughly 4 years. And those oil price swings have been hitting Asia hard as the region's heavy reliance on imported energy leaves it exposed to the escalating war in Iran and the resulting risks to oil supplies. The WTO data shows Japan and the Philippines get almost 90% of their oil supply from the Persian Gulf. China and India, they source as much as 45% of their energy needs there. And a blockage in the Strait of Hormuz could really cut supply, slow businesses, and strain manufacturing in these countries. Morgan Stanley says the region is most vulnerable to the surge in oil prices, with Europe and the U.S. facing more moderate impact. The Wall Street Bank estimates a sustained rise of about $10 per barrel in oil prices could lower regional GDP by 0.2 to 0.3 percentage points. Meantime, Japanese bank Nomura estimates every 10% rise in oil prices increases the region's import bill. That means that more money is flowing overseas to pay for energy, which drains funds from local economies, making it harder for countries to finance growth. While Asian economies are also facing increased fiscal burden, leaving the currencies exposed to risks. Governments often shield consumers from global oil price swings through fuel subsidies, price stabilization funds, and state-owned energy companies. So that cushions households, but it does shift the burden onto government finances. For more, we're joined by Priyanka Kishore, founder and principal economist at Asia Decoded. Priyanka, thanks for your time today. So we know Asia is heavily reliant on imported energy, and based on how the conflict has progressed so far, nearly 2 weeks, sharp fluctuations in oil markets, Strait of Hormuz still closed, mixed messages from Washington. I mean, what is your assessment on the kind of economic impact this region could see?
It's actually looking quite worrying, because what we are seeing is not just oil prices, which actually I would say have not reacted as strongly as one would have expected in these circumstances, simply because of the news bites that keep coming out of Washington, briefly moving upwards of $100, but then again falling back. But also there is a real physical energy shortage scenario that the Asian economies are staring at this point of time. And that just amplifies the impact of the supply-led oil shock that's playing out across the region, because most of the region is dependent to a large extent on imports from Middle East that come via Strait of Hormuz. I mean, ranging from, let's say, around 24% of China's oil demand that is met by such imports to as much as 85 to 87% of Japan and Korea's demands that flows through these channels. So indeed, this is quite concerning.
Yeah, indeed. So we can see which economies here are most vulnerable, which could be more insulated. What about China's role here?
So China is, of course, the world's largest oil importer, but it also sits on significant amount of reserves amounting to more than 2 to 3 months. So at this point of time, it appears less vulnerable than some of the other economies which might be less reliant on imported oil. For example, India to some extent, although it is also a very large oil importer, but is sitting on much lesser of oil reserves that it can unleash as the if the shortage unfolds, if this blockade of Hormuz continues for much longer.
Yeah. Priyanka, so Morgan Stanley estimates that a sustained $10 per barrel increase in oil prices could reduce Asia's GDP growth by up to 0.3 percentage points. What do you make of this figure? And beyond the energy cost impact, how significant would the impact from inflation and weak consumer spending be on Asia's growth? Although, some analysts argue that the inflationary impact might not be so bad because Asia is starting from a relatively low price levels.
So, the impacts are quite standardized. You will see most houses, banks putting out similar estimates in terms of, how $10 increase in prices or a 10% increase, how much that shaves off growth. The inflation point, I think, is important. I agree that we are sitting across low and comfortable inflation across most of the world. And in fact, heading into the Iran war, I would say Korea, Thailand, Philippines, to name a few economies, are more concerned about growth than inflation, as it was evident from the central bank communications. Having said that, I think the Ukraine war taught us that large and persistent, more importantly, price shocks can quickly morph into generalized price pressures, generalized inflation. And I think that that is a risk that central banks will not be willing to be caught off guard on. So we should see the region turn more vigilant on inflation, even if it remains comfortable now. We do not want to be in the middle of another spike, which, if it materializes, as was the case last time, would definitely have negative connotations for growth, consumption,
Yeah.
and growth.
Yeah, indeed. And Priyanka, some governments, they have responded to this by, issuing subsidies, that would further stretch their budgets. At this point, how constrained is the fiscal space? Is this effective? And, talk to us about the kind of risks to credit ratings or even debt sustainability. And which nations in particular are you paying close attention to?
So we know that Indonesia has already been downgraded. The outlook has been downgraded by a couple of rating agencies, even ahead of the Iran war, due to some other reasons. So clearly, vulnerabilities are focused there. Also, in terms of Philippines, I would say that most Asian countries at this point are at or near near their limits for sustainable public debt levels. And I do not really see the kind of fiscal space available that has been in the past for them to really provide a significant amount of subsidies. And so what we are seeing, that preemptive measures on demand management side coming in, right? We are seeing Vietnam advising people to work from home, Thailand so, and this could become stronger. These guidelines, which are such now, could become directives going forward in terms of demand rationing. Now, that would be more of a supply management situation in individual countries, but at a global level, with Asia being influential consumer of oil, it would also play a role in how oil prices move going forward and could dampen some of that upside pressure.
Yeah. Finally, Priyanka, I just want to ask you about the likelihood of a recession this year. I mean, don't forget, we're also dealing with the tariffs from the U.S. I mean, some countries in Asia, they are seeing their tariff rate revised down, but some others, like Singapore, possibly could be looking at higher tariffs.
I would not write it off completely, simply because that the Iran war is so uncertain at this point of time. This morning, we've had news reports coming in of Iran laying mines in the Strait of Hormuz, and I do think that the negative information on oil supply and the blockade continuing is coming in much stronger and faster than the positive information on reserves being released, or how much reserves are even available to actually tide us through, and for how long. So if this really persists for a few months and we see oil prices entrenched around $100 or higher, that would have significant growth implications. That said, I think at this point of time, it's fair to say it's a tail risk. You mentioned tariffs, but we are for now on the right side of tariffs. We have to see how future investigations pan out. More importantly, there's a tech upcycle that remains in place, and that has been positive for Asia.
All right, Priyanka, we thank you for your time today. Priyanka Kishore, their founder and principal economist at Asia Decoded.